Hello traders, this lesson is a continuation of the previous one in which we analyzed the CAD-yen currency pair. I said that the analysis of that currency pair is not over, so we'll now continue. Okay, we found two Fibonacci clusters, and I said that this first cluster or resistance zone is much better for trading than the other. The next day, when I opened the platform, I saw that the price jumped and almost entered the zone we marked and then made a huge decline. We seem to have missed this opportunity for profit, but maybe that's not the case. Fibonacci cluster represents significant support and resistance zones, but these zones have been obtained by using one tool, that is Fibonacci. I never use Fibonacci as the only trading tool, and I will show you in this example why this is important. The first thing we are going to add is a simple trend line that we will get when we connect these two previous peaks. The trend line shows us the direction of the main trend and also gives us the levels of support and resistance. In the rising trend, it is obtained by connecting a minimum of two bottoms. When the price approaches the trend line the next time, we have signals for the buy. In a downtrend, this line is obtained by connecting tops and provides signals for short. As we see, this level is just below the first Fibonacci cluster. Now, let's have a closer look at this chart, or the path of the movement of this currency pair. And especially pay attention to the tops and bottoms the price formed. We have two marked zones, but are they really strong zones? Let's see what the price says. Tell me how many times the price stopped right in this second zone. Once, perhaps twice, but in most cases the price went through this zone without any problems. This zone did not offer significant price resistance, so we cannot trust that it will continue in this way. So this zone is not good trade setup and we can delete it. And what do you say about this other zone? How many times did the price stop in that zone? Once, twice, 3 times, 4 times, 5 times, 6, 7 times. The price has recognized this zone as important 7 times, and we can freely mark it as a significant resistance zone and a good chance for trade setup. If we want to precisely determine the zone based on the tops and the bottoms, we will try to connect the highest and lowest points. This is next to the trend line, yet another confirmation that the zone of resistance should be moved a little lower. The level of overlapping of the trend line and the first line of our zone is a good level for trade entry. When we add the level of Fibonacci that we skipped yesterday, which is the most important level of 61.8, we get a great level for trade setup and to open the sell position. From this level, the price reacted and made a really big decline. Okay, let's summarize what we did in these two lessons. First, we found two Fibonacci clusters. Based on the movement of this currency pair, we realized that the other cluster does not represent a significant zone of resistance, but this first zone is. Based on the trend line and the previous bottoms, we realized that the zone should be moved a little lower. So let's see all we have in this new zone. First, the 50% level of the Fibonacci retracement, 61.8 Fibonacci level, 1.272 Fibonacci extension, trend line, 5 previous bottoms, 3 previous tops, more than enough for an excellent trade setup. What can we conclude? We can conclude that although we have found a very good sell zone with the help of Fibonacci, the price still failed to reach it. But with the help of other very simple skills, we managed to find a better zone and a precise level for opening the sell trade position. This was the point of this lesson. Fibonacci is a really powerful tool, but always try to combine it with other tools and knowledge you possess, and you will increase your chances of success constantly. I hope you understood everything. In the next part of the course, we will show you other examples of Fibonacci clusters. See you